Welcome to Global Tax Talks Tax in 60 Seconds. I'm Will Morris, and here are some things to watch out for in the coming week. Let's start with the EU, where the new slate of commissioners came into office on December 1, but with not a huge amount of certainty about who's really going to be doing what regarding tax. The new tax commissioner, Mr. Hoekstra, is in place, but while he does have a big job as the Climate, Net Zero and Clean Growth Commissioner, he is not the Economy Commissioner. Mr. Dombrovskis, who is the Economy Commissioner, and is thus perhaps more likely to go to the G7, the G20 and ECOFIN finance ministers' meetings where tax is generally discussed, has only limited tax responsibility. And while there are positive noises about competitiveness and, while not my favourite word, decluttering, the lack of a single commissioner owning the process may prove to be a problem. And in potential signs for the future, there continues to be no agreement on the Tax Unshell Directive, and the Energy Tax Directive reform is also slowing down. Meanwhile, France's newish government was voted down last week, and the German coalition has dissolved with elections likely due in early 2025. As a result, the so-called Franco-German motor, which is really important in driving tax in the EU, is currently not doing that. So uncertainty beckons, just as a potentially more assertive US administration comes in. Meanwhile, on the transparency front, there has been a big move recently, with Australia approving public country-by-country legislation affecting not just Australia, but likely, based on a draft list from earlier this year, another 40 countries, including Switzerland and Singapore. This legislation contains some significant provisions that go beyond EU public country-by-country reporting and OECD CbCR. This really is a game changer because with the 40-odd countries for which Australia likely will require public CbCR, when added to the EU's 27 plus others from the EU's black and grey lists, that means that by the end of 2026, when Australian reports are due for calendar year taxpayers, there will likely be public CbCR for 70 to 80 countries. Yes, 70 to 80, many of them quite major. There are also a couple of divergences from EU and OECD CbCR worth mentioning that come from GRI, that's the Global Reporting Initiative, Standard 207. These include the requirement to spell out the approach an entity takes to engaging with stakeholders, including tax authorities. And there's also another GRI-inspired provision, which requires a rate reconciliation, in other words, an explanation for the difference between the income tax accrued and the tax that would actually be due at the statutory rate. Where relevant in any of those 40 or so jurisdictions. Big changes. Anyway, thanks for tuning in and come back next week so that you stay global tax ready.